Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, August 15, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We have a melt-up situation. When I was looking for a low at the first part of August down here, little did anybody know that just several days later, just basically 9 trading days later, we would be all the way up here saying what sell-off, what are the real price targets for 2024, or new highs coming, not really if, but when. All those discussions are happening as we speak. I mean, you look at the weekly chart and forget about this trend line, you say, well, look at this. Look at this ramp rocket ride from the low last Monday, never looked back. Hardly neary a pullback. A one-day fake out situation on the second day after the bottom, and that was it. Basically haven't looked back yet. An unbelievable rocket ride. Now, it's early, but this leads into something else. We're going to come back to this in a moment, but this leads into something else that's very, very important. Think in terms of how many people, forget about the fact that you may have been in tune with looking for a low, I may have been looking for a low, but how many people out there, how many of the average general Joes out there were looking to pick up stocks or the market at the lows? It's too scary. It's a falling knife. The market's crashing according to the pundits. How can you possibly buy stuff down there in the face of an eventual crash? That was the prevailing wisdom at the time. Go look back at the news articles from the first couple of days of August. Now, when you systematize and you process-atize, if you will, the idea of swing trading, and you have parameters, you have an semblance of parameters that you will trade stocks or markets or anything at based on certain conditions, certain parameters lining up at the same time. Where am I going with this? Well, last Monday, that was exactly, not last Monday, but the Monday before. Over here on the 5th, and even a day or two after that, the lazy swing trader automagical algo system was buying with 3 hands. What does that tell you? Don't listen to what I say as much as just watch what the thing does. It's programmed accordingly. How about DLTR? So the thing was opening trade, alert goes out at 95.72. 99.75 is the exit target. That happened first thing in the morning, and there you have it. It's a risk-free, emotionless trade. Can't lose money on the rest. Break even, stop. That's it. How about ADM? ADM was bought down here on the 13th, just 2 trading days ago. First exit target today, 58.85. It's not sexy, it's a base hit, but now it's a risk-free, emotionless trade. Archer Daniels Midland. Now here's where they start to get a little bit sexy. Bought Amazon on the 5th, dead low, 151.71. This was a third exit today, 176.80. How you doing? Rocket ride. Amazon. Lazy swing trader, automagical algo system. But wait, there's more. Entry alert on the 8th of August. Exit alert 47.45. Base hit in your pocket, risk-free, emotionless trade at present. That's almost 8% on the first exit. How you doing? Amazon, we're 15%, give or take. It's ridiculous. In days, off the dead low. Lazy swing trader, automagical algo system. And stay tuned. Mega uber platform enhancements coming. It can only get better. All right, back over to the spiders. What are we looking at here? What's the next thing? Where's the next place? We don't even need this trend line anymore. They just jumped over it like it wasn't even there. Well, we're looking at this breakdown candle high. It's that simple, right? This is a breakdown candle. The high is officially 554.87. And what we do know is the large majority of the time, first time, best time applies when they pay a visit to the neighborhood, whether they spike the high, come up short of the high, hit the high, bullseye, either way. When they pay a visit in the neighborhood of the high of a breakdown candle, first time, best time, they generally can't blow right on through. Can it happen? Has it happened? Will it happen again? Absolutely. It's just using the 80-20 rule, or even more than that, like 85-15 or more. The first time, best time, they're not going to just waltz right on through a place like that, especially as far as they've come right now. We're coming into the end of regular way options expiration week. We talked about this a couple of times during the week. Can they jam it up through the end of options expiration week? I don't know that the market's going to be up tomorrow, but certainly at this point, you think, well, look, they're jamming it up into the end of options expiration week. What's the place? If they were to get, for example, let's say they have a continued melt up on Friday, and let's say they were to get above this breakdown candle high at 554.87. The main question is, where would they be going? What's the number? Are you going to give it to me? And the answer is, I am. First, let me just make mention, Inside the Numbers is closed tomorrow. The live room will be open. Jordan will be moderating the live room. And now, let me give you that particular number. I'm not saying they're getting there tomorrow. I'm saying if they're in the vicinity, if they start to run up, if they're above that breakdown candle high, and they're rising, and it looks like they're rising some more, and they're coming within a stone's throw of, you can call it 557. I've got it listed as 556.95. That would be what I will call a meaningful number when reached, if reached, sooner than later for sure. Flip side, below today's low, if somebody were to pull the rug out of this thing tomorrow or any point in the future, at least for now, going into tomorrow, below today's low is where she starts to fall apart. There's a lot of white space down here in between today's low and the gap left open on Wednesday night, which is ironically right at that dotted line, which is what? The 618 retracement. So could they come back to pay a visit to that 618 retracement? Could they knock on that door? Could they fill that gap? Absolutely. You have to be aware because the door would open. Doesn't guarantee anything, but the door opens if they get below today's low, 548.88. What about inside the numbers? Anything happened there? You know, these gap and go situations are tough to trade. It's not a traders, intraday traders type of tape. We had one scalp on the board. We had some money that was made in the live room. What I will do is point out a couple of important things. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. We had an economic data release at 8:30 a.m. Eastern Standard Time, so all this stuff on the board is nil. They jammed up the market. They used it as an excuse to goose the tape, as I like to say, 8:32. The 8:30 data release is another excuse for the bulls to run a goose operation, and we're going to start focusing on 549.80. They blew through pretty much everything. So what we're saying here is above 547.50, the door's open for 549.80. Let's see what else we have on the board. The update is, and this is 9:48, we're still not even open yet, not even close. They're in the midst of an early morning melt-up operation. 549.80, give or take, is the next spot. It's also a stone's throw away from the big fat round number of 550. Under normal garden variety market conditions, it's a target and overhead resistance. Now, what do we deem overhead resistance? A place where they stop going in the direction they're going, and they should provide a scalp at minimum. That's a base hit for us with potential. A minimum base hit for us is 5 to 7 S&P handles, 50 to 70 SPY cents. That's the minimum required base hit. If we can't get a minimum required base hit out of that, I'm not even going to put it up on the board. Right of the vertical is today's activity, 5-minute chart. 549.80. They spiked it. They pulled back. We'll call it 9 points, 9 S&P handles. The low in this candle is 548.88. So they gave us the scalp. What they didn't give was any more potential than that. So they gave a little bit more than the scalp, kind of a rounded first base, but had to retreat. It was a base hit between second and shortstop, right up the middle. They went back up. The trade is over. Once they go past the entry point, we don't let the remaining portion or the trailing portion of the trade go bad on us. Therefore, we're happy with the base hit. Base hits put you in the Hall of Fame. If a trader was to ride the market up today, that was with their own or of their own volition. Not that easy just to hop on in a gap and go scenario. It's a buy high, hope they go higher situation. That's not really what I do. That's not my specialty. So that would be for somebody else. Pause the video, read the notes, go back to the chart and double check the work. Here it is again, 549.80 up to a spike of 550s, overhead resistance, yada, yada, yada. At least for a scalp with potential. It's a scalp. That's what they gave us. Opening right into the resistance zone, and you can pause the video, read the notes, go back to the chart, and double check the work. Once they start pushing above the number 540, the door opens for 552, 552.55, and there's your 552.55, and you can see that. Then they pulled back, and then into the end of the day, they fluttered around in and around that number. Pause them, read them, go back to the chart to double check the work. Camp IWM today, they were up nicely at the end of the day, up almost 2.6%. Came up short of the 20-period moving average and pulled back. Still a healthy up day nonetheless, over $5 for Camp IWM. Playing a little bit of catch-up situation. Above the 20-period moving average, where do they go? Well, they work their way up to fill this gap up here. That's all you have. There's nothing in this no man's land other than the former high down here. That's where they gapped up. That was pretty much, you could see where the low of day held on right around this former high. They got short of or came up short of the 20-period moving average. And the only other thing to know up here is above the 20, they're going to start to work their way to this low over here from this day on the 1st and then the gap. Those are the only things you have on the board. It's not rocket science. It's technical analysis 101. Interesting scenario, interesting candle for the folks down at the transportation department. So here you have a transportation department that was up 400 points earlier in the day, finished not, at the lows, but not far off the low of day, still a decent gap higher, up over 1.2%. But you could see this is not a strong finish from a technical perspective. It's about how they close them. It's about what they look like at the end of the day, not necessarily how they trade out during the day. Canary in the coal mine, favorite canary in the coal mine. We can't unknow this information. We can't unsee what happened today. It doesn't necessarily directly mean anything is going to happen tomorrow or beyond. What it means is that it was a poor finish to the day, and we have to watch this to be a canary in the coal mine that could possibly lead the other markets in the same direction. It is somewhat of a divergence from a look on the chart. That's the way I'm approaching this. It's a puzzle piece. It's on the table. It's part art form, part science, part experience. On the other side of the coin, absolute rip, roar, and rocket ride for the Qs today, up $11.69, 2.53%, well above average, which is a sense. The last moving average line of defense right around the point in which we've got this breakdown candle high, 475.55. And you'll remember the conversation that we had today and that we have most other days. And if you're in the live room, we certainly have this one on a daily basis, which is first time, best time, 475.55 is that breakdown candle high. The 50-period moving average was reached today. This is a big time chart. This is a retracement. Are they going to blow through here and close the week above that breakdown candle high? Or will this be overhead resistance? We'll see. It's a weekly high. It's a daily high. It's a big time place. We're going to see what Mrs. Market has in store for the Q people. I know it certainly feels today like the market's going to just keep going and make new highs. But I will remind you that things can change. Not saying they will tomorrow, but they can change on a dime. just like the low. Who wanted to buy the market at the low other than the lazy swing trader automagical algo system? Most people didn't expect a turn to wind up like this just several days later. So you never know what's going to happen. And I'm just telling you, under normal garden variety conditions, using the old standard 80-20 rule, I'm saying that first time, best time, up to a big time breakdown candle high is usually a form of overhead resistance. Take it at face value. That means that out of 100 times, around 20 won't work and they will blow on right through. But 80 of them, give or take, will not. Financials had a decent up day, up 40 cents or 0.93%, or not 0.93, 0.9%. So it wasn't a tremendous day. It was kind of a laggard to the S&P, if you will. You have a doji candle going. They missed an important number that you didn't know about, but I'm telling you they missed it by a few cents. That's kind of interesting information. So we might want to put this on the table as a puzzle piece. It has canary-ish qualities or properties. We'll see. Nothing wrong with the tape. Those are facts. You're approaching new highs. When you look at the weekly chart, there's nothing wrong here. Daily chart, they might want to have to come out and prove a couple of more things. Smash mouth, same routine. Look where they are. Breakdown candle high. You could see this all of a sudden. Well, let's find out what price that is. Now look at that. 246.80 is the number. They got there today. The high was 247.34, but they didn't close above, so that's interesting. Let's see what they do tomorrow. That, at least from a first time, best time, at least first time was overhead resistance, which is defined as phase one, stop going in the direction they're going, which is overhead resistance is up. In support, the first phase is they stop going down. The next phase is they either go sideways or they go back from whence they came. So we'll see what happens with Smash Mouth tomorrow. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.